Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Friday, February the 23rd, 2018, with yours truly, the Algo Capitalist, aka the Vulcan. First chart is Bitcoin futures. As you can see here on the weekly chart, still in a bear market. Nice retracement off of the lows. However, running out of steam and failing to get a strong close for the week. Market needed to close above 10,216. Instead, we closed below 10,000. We closed at 99.20. This sets up a lower price action for the week to come. That's not to say that it can't try to make it up to the magenta line of 13,122, which is the first resistance overhead. Anything is possible, but normally you like to see a nice close here to continue the price pattern. Right now, not looking too good. Looking like any rally in the coming week will be sold. And the 58.80 now is in play, which is the old low. This is getting interesting as far as the Bitcoin and the altcoins. Bitcoin is the leader and usually leads the altcoins as well. Not to say that every altcoin is going to move in the direction of the Bitcoin, but the main players overall will be moving in sync with the Bitcoin. Interesting to see here too, if you take a look at the Bitcoin chart and then compare that to the US dollar chart, you will see some similarities. All right, downtrend as well, tried to retrace off the lows, and it needed a close today above 89.86. We got a close at 89.88. All right, so two ticks off, 2 ticks above the momentum line, so just barely. All right, so this does open the door for further retracement toward the 91.57 handle, which is this trend line resistance here. Should we still see? I mean, it's going to be a seesaw like I explained in the prior video. You're going to be in a trading range between the 89 and the 91 handle. That's where Trump really needs to have this thing at. So it's going to be a delicate balancing act to continue the White House policy for import-export conditions to be optimal for U.S. trade. We shall see how they do with it. Taking a look at the long bond here. Similar price pattern as Bitcoin and the US dollar. All right, except for you hit a new low this week, 142.14. Market needed a close above 145.21. Instead, we got a close of 143.04. It missed the mark, therefore opening the door to further declines in the week to come, pushing the price action below that 140 target that I spoke to you about many moons ago, back when we were up in this piece. So 140 handle is still in play. Moving over now, taking a look at the gold futures. Gold is still moving sideways, as you can see here, consolidating above the Kumo cloud. All right, kind of seesawing. You lose it, you gain it, you lose it. So this is what we're doing right here. The overall trend is still bullish, still in a bullish pattern. The market has just ceased trending at this point. Needed a close above 1335.10. Instead, you got a close of 1330 half. Falling short, but because we're within the consolidation zone, market could still end up doing this bar next week. So we're still consolidated until we aren't. And the market is still in a bullish pattern configuration until it isn't. Taking a look at GLD, you should find a similar price pattern. Yes, you do. Needed a close of 126.35. Instead, you got a 126.14 close. So just fell short of regaining that momentum, but overall, same chart as the gold futures. You're consolidating above the Kumo cloud. But the overall price pattern is still bullish. Looking at the GDXJ, GDXJ needed a close above $32.55. Instead, you got a close at $31.91, fell short. And this opens up further downside in the week to come. But because you're in a consolidation below the Kumo cloud and you're in the bear market and it has ceased trending lower at this point, doesn't mean that we won't head lower next week. So this is where you are. One could make an argument that we got kind of a flag here, and it's still possible for the market to try to break out here, but if it does, it'll probably be a false breakout because you're at the bottom of the Kumo cloud and you got your trend line resistance lines right here below the cloud as well. So major resistance here. Any kind of rally you see will more than likely get sold, and I'm calling this one further down. I think we're going to break that $30 handle that I talked about a ways back as well. So this is still looking bearish. All right, taking a look now at silver. All right, same thing here. Price action happening below the Kumo cloud, but your trend lines are inside the Kumo cloud. So this is acting as a strong resistance to try to push prices down. This is still consolidating though, even though it's below the cloud and the trend lines are in it. It's just a sideways market still. This one's going to take some kind of story or something, or just some kind of momentum to give it a direction. Right now, it really doesn't have one. You're flatlined. All right, you're in a bear market, but you're flatlined, and you're playing around the Kumo cloud. So this one there's just nothing going on here in the silver. SLV, same story. You're just consolidating, folks. Technically speaking, prices are the same as they were in December. We haven't gone anywhere, folks. Here we are. This right here is the week of December 2016, and this is where the prices are now. 2 years later, folks, and we're still at the same price. The price hasn't moved in 2 years. This is it. This is how commodities can do. Commodities can consolidate for years like this. All right. I think the record is held by coffee, if my memory serves me right, consolidated for 10 years straight. Yes, the market consolidated for 10 years. So yeah, it can happen, folks. No story here. All right, this is just where you are. The last time you thought you were going to do something, it broke here. Same thing is happening here. We'll see. All right, looking at the silver miners. All right, same story. Tracking with the metal perfectly. Same scenario, except for this one's more bearish because it's definitely below the cloud. So this story is looking really bad. Everything's looking mad bearish in the metals at this point in time. Here's one we haven't looked at in a while: natural gas. Natural gas. Same story. It's consolidating too. It is straight up consolidating. It's the same price it was going all the way back. Let's see here. All right, we're at the same price it was back, going all the way back to June of 2016. I mean, what you gonna say? Almost 2 years of consolidation, nothing, going nowhere, stuck between 250 and 390, just going nowhere, just caught in a choppy range. And you're bearish. Everything's below the Kumo cloud, and you're just in a free fall state. At some point, these rallies here are going to get sold, and I think we're going to head lower. We're going to break 250 to the downside. We'll see, unless some kind of story can come up. I mean, we're about to hit spring, and I just don't see it. I see it heading lower. Let's take a look now at your crude. Crude oil is maintaining a very bullish stance. You got rampage coming up into the summer, as it should. Prices should reach top out around $70 a barrel. We shall see what happens, but this one is really staged well to first take out the $66 handle. So This high is in play for the week to come. So calling the crude oil higher for next week. All right, let's take a look at. Let's look at Hack. Hack is getting stronger, getting closer to that $35 handle I warned you about. And really 36 is really in play right now too. So this one's very bullish right now. Very bullish. Hit a new high of 34.44. Not looking good as far as false flags and other cyber threats and cyber related threats. Just not looking good at all. The world is gone mad. Taking a look here at what else? Let's look at NAC. Haven't looked at NAC in a long time. And nothing. It is broken. Got a gap here that needs to be dealt with though. Really got to deal with this gap. So at some point it has to do that. But right now it's lost all momentum, 4 weeks running. And I don't know. Maybe it needs a story because it's not moving. Let's see what else we got to look at. Oh, NVIDIA. Haven't looked at NVIDIA in a while. Let's look at NVIDIA. NVIDIA back roaring again after that correction. 251.97, a new high, folks, in NVIDIA. It's just rip running. Advanced Micro Devices, it's just not catching up. This one's not. This is the lagger. It's really whack. It's not doing anything. You would think it'd be benefiting more from the whole blockchain thing, but it's not. IBM has a lot of money going on in it too. It ran up and then just collapsed, and it's not really moving too well either. Let's look here. Riot had a huge correction, ran up to $46.20 a share, and is now broken all the way down to $10.27 a share. So Riot was running and then it just collapsed. So it's not doing anything yet. It's bearish at this point. And of course BTCS holding steady around that 9-cent threshold floor. Missed the opportunity to catch rampage here, and now it's just looking bearish as can be at this point. All right, looking at the Dow, you can see it's trying to rally from the correction as well. And it did get a bullish close. It closed above 25,061. We actually got a close of 25,303. So it bested it. And right now, I think it's gunning for the old high of 26,684. So this one is in play to the upside. Taking a look here at the NASDAQ. All right. Same story here. It closed above the 67.13 3/4. We got a close of 69.02 half. So the 7,047 1/4 high is in play for next week on this one. Now I did tweet out the other day that I was picking up something in the algorithm suggesting a major breakout move was coming, and it looked like it's going to be to the downside. And I saw that crash alert in the stock market. I saw it for the Bitcoin and the altcoins, and I saw it for gold and silver. Now, we did have some intraday corrections, but then prices reversed for Take Back Friday. So I'm still going to be watching stuff because something's telling me that we could come up here, take out these highs, and then just this massive selling could come, and then the market could take another dip. So we'll see. But right now, it looks good. If all things being considered, we got this upward trajectory coming, taking highs into the summer. But if anything goes wrong, folks, prices could easily drop to the Kumo cloud. This could turn to a bear market or just a mess. But right now, we trade what we see. But only thing I can really stress and suggest is to use good stops, good tight stops, and take profit along the way on the long side. All right, and just be prepared to pivot if and when that time comes, folks, because it could come without warning and it could come intraday. So keep your eyes and ears open. And with that being said, postwavetrading.com, come learn how to navigate these artificial intelligence markets and learn how to read the algorithms. The best way to do that is with the weekly post wave price triggers. 7-day free trial going on right now at postwavetrading.com. Come learn how to do this so you can create an extra income stream for yourself. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.